Hello and welcome, I'm Yash Maheshwari and you are watching Last Tick here on News9, where we bring to you the lowdown of the day's action on the last week. Now, Indian markets have surged to a record high on Friday, with Nifty rescaling the 22,000 mark in the morning trade and Sensex also reclaiming the 73,000 mark for the first time since mid-January. However, the indices could not hold on to the morning gains and saw a sharp correction around the 12 p.m. mark to trade sideways from there on till the end of the session. Nifty, which had hit an all-time high of 22,126, ended 0.72% higher at the 21,853 mark. On the daily price charts, however, the index has formed a shooting star candlestick pattern, which is a bearish pattern signal, and that suggests a potential trend reversal from bullish to bearish in the short term. Also, the previous record high is very close to the most recent record high. The previous record high was just 2 points lower than the fresh all-time high. Now, this indicates that there was a double top formation on the daily price charts, which is another bearish signal. So, perhaps going forward over the next few sessions, expect some dips in the market, and if that dip does come, the first support for the index could come around the 21,747 levels, which is the 61.8% retracement level of that entire fall from the previous record high to the recent low of 21,137 mark, which was formed on January of 24th. Now, if we break even below that, the index could perhaps take the support at the 21,630 to 640 level, which is the 50% retracement level, as well as the 20-day moving average. On the upside, the first resistance level could come somewhere around the 21,912 mark. Now, this is the 78.6% retracement level, and after that, if we are able to move beyond that, 22,000, which is a crucial psychological level, could pose as a next resistance zone. But moving on to the 30 share Sensex, now that ended with gains of about 440 points to end marginally below the 72,100 mark, just 15 points below it. The index, as I mentioned earlier, had scaled the 73,000 mark today, but we saw a sharp 900 point decline from its intraday high. Note that Nifty, while Nifty had made a record high in today's trade, Sensex did not. It came about 300, it fell about 300-400 points shy of that record high levels, placed somewhere above the 73,400 levels. Also, both indices have also snapped their 2-week losing streak. They both ended with gains of about 2%, whereas in the previous 2 weeks we had seen cuts of about 1% for both indices. But moving on to the broader markets, they also ended in the green today, and both mid-cap and the small-cap indices, in fact, scaled a fresh record high for the second day on the trot. The mid-cap index, which touched an all-time high of 48,796, ended about a third of a percentage point higher at 48,477 level. The small cap index, on the other hand, was the best performer among the three, the large, mid and the small caps, ended almost 1% higher at 16,277 mark. The index also scaled a record high of 16,388 in today's trade. Moving on to the sectors, it was the banking index that was a major drag today, and that the drag on the market was led by HDFC Bank and other private banks like Axis, Kotak, ICICI and IndusInd Bank, to name a few. The index closed with a cut of about 0.5%, and even from the intraday high, it corrected by about 900 points or so. However, for the entire week, the Nifty banking index surged about 2.5%, and with that, it has snapped its 4-week losing run. And despite the underperformance that we saw in the private banking counters, PSU banks shined today, and in fact they were one of the best performing sectors, and the entire pack surged by about 2.2% today. In fact, it also has managed to scale a record high in Friday's trade. Now, IT stocks were some of the other leaders in today's rally. They also surged by about 2% or so. Now, this was led by a rally in heavyweights like TCS and Infosys that surged 2 to 3% today. And IT stocks, now what led to this rally? They surged on the back of a rally in tech stocks in the US after tech firms like Meta and Amazon reported upbeat earning results. Among other sectors, metals, realty, auto ended higher, while the FMCG pack was seen under some bit of a pressure, and that ended with about 0.2% lower. But that's all we have in this edition of Last Tick. On the other side, catch the post-budget analysis featuring my colleagues Kartik Malhotra and Shweta Kothari, who interview Niti Aayog member Dr. Arvind Virmani and Economic Advisory Council to the Prime Minister, Mr. Sanjeev.
A very good evening. You're watching a rolling coverage on the interim budget 2024 presented a few hours ago by Finance Minister Nirmala Sitharaman. As expected, no big bang reforms as expected, no changes in tax slabs, and the ever elusive target and the roadmap of the target to 7 trillion and the dream to become a developed economy by 2047. Are we getting there? Will we get there? Will we get there fast enough? And will we get there in an equitable manner? These are some of the key questions that we will be discussing over the next 40 minutes or so with two stalwarts of the Indian economy who've been watching the Indian economy and the global geopolitical and geoeconomic events for decades. Let me first begin by introducing our first guest on the show, none other than the economist, the famed economist and the full-time member at Niti Aayog, Dr. Arvind Virmani. Dr. Virmani, thank you so much for joining us on this very busy and a very special day on the evening of the budget, and it is a pleasure to have you here with us. Sir, my first question to you, everybody was expecting and all eyes were on FM to have some sort of a roadmap laid out for the $7 trillion economy dream by 2030. Do you think the FM in her budget speech has done justice to laying out that roadmap?
Yeah, the way I would put it is slightly differently. The goal is Viksit Bharat, and there are intermediate steps. For example, one of them is you have to go through becoming an upper middle income country and then a high income country, which is what the Prime Minister envisions when he says Viksit Bharat. So I think certainly what the budget did was to show what we have been doing in this direction and what the government would continue to do. And very briefly, there are three parts to it. I'll give the overview and then we can go into the details. So the way I look at it as an economist, which is my job, of course, he would have political and other things and communicating with the public, but the three basic parts of this of sustained fast inclusive growth and development to become Viksit, to become developed. So the three parts, important parts are the sustaining fast growth. So there issues like reforms were emphasized, past reforms and assurances of continuing reforms. The public goods infrastructure, again lots of examples of what has happened and what will be done, will continue to be done. The second part is the empowerment, and in some way there's two parts to it. One is Antodaya, I call it, the poorest of the poor, but the basic approach, as the finance minister said, is to move from entitlement to empowerment. So there are of course basic needs which have to be met, but the idea is to